Hey, what's up? Well, we have big changes happening right now in the new home market. In fact, new home prices, new construction houses, the prices of those houses have dropped 16% or over $80,000 since October of 2022. And why is that? Well, that's what we're looking at today. Why are new home prices dropping? Some say we're headed for a crash, but there's actually another reason that really surprised me. It may surprise you, and that's what we're looking at today. My name is Jasson Farrier. This is Ohio Real Estate, and I am a real estate agent and an investor here in Central Ohio. If you need help buying or selling real estate in Ohio, give me a call. All right, let's get to the data and let's look at why new home prices are dropping. First data set we're going to look at on new home prices is from Fred. This is a simple chart you can access anytime. The link's in my description below. But we're going back to about 2005, and then we're going to look all the way through 2023, and we're going to look at where new home prices have gone. All right, so this chart shows you the median sale price for new construction houses, just new houses, not existing. New houses. You can see these gray areas here and here represent recessions. And when you look at the data, you can see back in 2000 and let's look at 2007, March of 2007, we were at $262,000 for the median sale price of a new construction house. It dropped to $205,000 in March of 2009. But then you flash forward and you could see the run up we had, which is actually a normal increase year over year. New home prices, like most real estate, goes up. And then it peaked in October of 2022 at $496,000, actually $496,800 according to Fred. So new home prices spiked at $496,000. Now, look at December of 2023, we're at $413,000, a pretty significant drop. Again, about 16% or over $80,000. Again, this is just new homes, not existing homes. So it's clear we have had a drop in new home prices. So why have new home prices dropped in the last year so much? Well, one reason is, and this surprised me, builders have been building smaller houses. So houses are getting less expensive because they're getting smaller. That's one reason. Now, I don't pretend to think that's the only reason why new home prices have dropped, but I do think it's a big factor. And if you think about this, interest rates, how they spiked recently, the larger houses, the more expensive houses, people are not buying as much because interest rates are high and payments are higher than they have been. So people naturally are gravitating towards more affordable houses, and builders are starting to cater that. Let me show you what I mean. So this article that I'm going to show you right now, this is from a group called Resi Club Analytics. Resi Club is a fantastic real estate data analytics company that puts out awesome articles and analysis in real estate that, and specifically residential real estate, that quite frankly, I don't see anybody else do. And the link's in my description below. I really encourage you to check them out. Okay, so the title of this article is Housing Affordability is So Strained That Some Home Builders Are Turning to Smaller Builds. That's right. So the median square footage for a new construction house fell by 3% in 2023, marking the biggest single year dip over the past decade. And what you're going to see, and they talk about this, is that the size, the median square footage of new houses has dropped 12% in the last decade. Because like in 1950, 1960, post World War II era, houses were pretty small compared to today. Like I own a lot of rentals that are in like the 800, 900,000 square foot range. A lot of families like those because they're easy to take care of. I can charge less rent. And for me as a landlord, it costs less to repair. Like if I need to do a roof, less money, smaller yard, just easier. And you can buy them typically a lot less than you would a much larger house. Let me show you what I mean. So this article talks about how D.R. Horton specifically, and the CFO, Bill Wheat at D.R. Horton, was interviewed and basically said, hey, we know home affordability is super challenging. Prices are out of this world. So to compensate for that, we're starting to, obviously, we're going to keep our incentives going, the builder incentives that all new home builders have. And we're going to focus on smaller builds, smaller square footages. So this is pretty interesting here. So this chart will show you how much the size of houses has dropped over the past several years. And it goes back to year 2013. The orange is existing houses, the blue are new houses. So I thought this was really telling that, yeah, existing houses in general are a lot smaller. I mean, look at this. In 2013, the median square footage for a existing house was 1,593 square feet. Today, it's 1,607 square feet. So really not much change, no surprise there. But the new houses, look at that. In 2013, new houses, the median square footage was 2,313 square feet, much bigger than existing. And it kind of stayed flat, but then it started dropping. And now it dropped a lot more. Now it's 2,036 square feet. So it dropped nearly 300 square feet, which is a pretty sizable drop for a house. So builders, obviously, as they expanded outside of metro areas in the early 2010 range, they were building big houses. Like if you go to like Texas or some areas out west, there are houses outside of the metros that are just like, they're massive, like 3,000, 4,000 square feet. And a lot of families have realized, I don't need that size of a house. I'd rather have a smaller house. And because demographics are changing, people aren't having as many kids, yada, yada, yada. It's like, well, I don't have a huge family. I don't need a massive house. And affordability is so strained that it makes more sense to purchase a house that fits my lifestyle. And that may be a smaller house. Plus, you have people downsizing into smaller houses. So the article goes on to say, according to Parcel Labs, which is a data provider that Resi Club uses, the median square footage for new construction fell from 2,098 square feet in 2022 to 2,036 square feet in 2023. That's a 3% year-over-year decline and marks the biggest single-year dip over the past decade. So builders are recognizing that affordability is constrained and they're modifying their inventory and their building process to build smaller properties. All right, so like this picture here is an example of a smaller house that they would build. And they actually talk about, it could be from anywhere from 350 to 660 square feet. And I'm curious, comment below, have you seen a lot of smaller houses like this in your neighborhood? Have you seen new builds in your area that are smaller than traditional new builds? Personally, for me, I have seen a lot of smaller new builds here in Central Ohio. I have, however, continued to see larger houses go up. You got to remember this, Ohio, relatively affordable compared to most of the country. The article goes on. Over the last few years, we've seen home sizes decline slightly in response to pricing pressure, but that's after 40 years of increasing home sizes. What's new is builders are now going small, building homes that are similar to what we saw in the very early post-war suburbs. Builders are responding to more than price. The move to smaller houses is a result of demographics. More single households, fewer children and families having children later in life. Lack of buildable land is also a factor. Builders have been pushed to sites previously considered undesirable for single-family homes, where more lenient restrictions allow them to experiment with products that are more affordable and more responsive to the needs of a broader array of consumers. Not everybody can afford a 3,000, 4,500, 7,000 square foot house. Some folks just want a simple small house, and builders are starting to recognize that. So comment below, do you prefer a large house? If you do own a house now, do you like a smaller house? If you are looking for a house or you're a renter, what would you prefer? Small, 1,000 square feet, 1,500 square feet? Or are you like, man, I want a 4,000 square foot house. That's what I need. I need 5 bedrooms, 3 baths, and, big grand entrances. So why are we talking about new homes so much? We're talking about new homes because inventory has been so constrained across the United States, especially over the last few years. In fact, inventory is at almost record low levels. And despite what you'll hear from other YouTubers, inventory, even if it's increasing by double digits right now in some metros, is still in many areas way below it was before the pandemic. And so because there's a lack of existing inventory, builders have ramped up their production to meet the demand of the market. To show you just how much inventory we need to build, I'm pulling up an article now from Resi Club again. And Resi Club is great because they have the guy that runs it, Lance Lambert, he will use data from several different providers, aggregate it, average it, and then look at, hey, what overall are these data providers saying instead of just picking one or two. I really like that. And he takes a lot of time to put this data together. So this article is called 11 Studies and One Conclusion. The U.S. housing market is underbuilt. And he goes on to say, we tracked down housing supply studies from 11 different research firms. Here's the roundup. And before we get into the article, I don't know if you heard or not, but Jerome Powell, the Federal Reserve Chairman, just a few weeks ago came out and said the reason why home prices are so elevated is a lack of supply. And he actually specifically called out building and said because, people have moved outside of the metros and started, because of COVID and just expansion, we haven't kept up with the demand with new construction. So what he actually specifically says here, I'll read the quote. He says, we have longer run problems with the availability of housing. We have a built up set of cities and people are moving further and further out. So there hasn't been enough housing built. Powell said this during his press conference on January 31st. Most housing analysts agree with Powell. Many believe the culprit is the fact that for years following the great financial crisis, the country had very low levels of entry-level single-family home construction. And to demonstrate that, I'll click on this link here that he provides, and it goes back to Fred. So in his article, Lance links to another Fred chart, Fred economic data chart, and this is for new home starts. So how many new homes were actually had broken ground in that year and started construction? And this is pretty telling because in February of 2006, we had 1,804,000 houses started construction. Then the GFC hit and it dropped down to the basement, right? So then it all dropped all the way down in March of 2009 to 353,000 starts for the year. Not a lot at all. And that killed inventory because builders went out of business. A lot of them mothballed projects during the GFC. They weren't building. And because of that, inventory was constrained because then we got out of the GFC and, people started, wanting to buy more houses and the market started picking up. We didn't have the supply and that's killed us ever since. I mean, look at this. Now we've continued to build more and more houses and we actually spiked recently. Our recent spike was in December of 2020. We were on pace for 1,311,000 housing starts. Still not even close to what we had back at the GFC. Then it dropped again down to 887,000. And then in December of 2023, we ended at 1,027,000 units. But you've got to look at this chart and realize we're not even close to the amount of building we had before the GFC. So if you hear people on YouTube saying we have a supply problem that is similar and the same as the GFC, I mean, unless this chart's completely wrong, no, we don't. But let's go back to the article about inventory. So the article goes on and says, these firms, these 11 firms that he studied, believe the real debate is to what extent the U.S. housing market is underbuilt. Not the question if it's underbuilt, because they all agree it's underbuilt. Even Jerome Powell agrees with that. But the real debate is by how much. It was pretty cool how he figured this out. So he says, to find out, Resi Club tracked down studies from 11 different research firms. Among the 11 studies we collected, the average firm estimates that the U.S. housing market is underbuilt by roughly 2,745,000 units or homes. This is single-family houses we're talking about. These individual estimates do vary a lot. Zonda, a research firm focused on new construction, estimates the U.S. housing market is underbuilt by about 1 million homes, while Fannie Mae puts that underbuilt figure at 4.4 million homes. So got Fannie Mae at 4.4 million. And then at the bottom of the list, you got Zonda at 1 million. But like he says in the article, regardless of how you slice it, we're underbuilt. And you can see who they studied. Fannie Mae, 4.4 million homes. Zillow, 4.3 million homes. Bank of America, 4 million homes. Freddie Mac, 3.8 million homes. NAR, 3 million homes. Realtor.com, 2.3 million. Morgan Stanley, 2 million. JP Morgan, 2 million. John Burns, 1.7 million. Moody's Analytics, 1.7 million. And Zonda, 1 million homes. So all these firms agree we're underbuilt. The question is by how much? So let's look at some of what they said. They said, like Fannie Mae, the most recent estimates by Fannie Mae reported in October of 22 find the US housing market is underbuilt by approximately 4.4 million units. They got Zillow in here. They said it's 4.3 million units, right? Bank of America had some commentary here. The Bank of America Institute estimated in January of 2023 that the US housing market is underbuilt by at least 4 million homes. We believe underbuilding over the last decade has absorbed the 2 to 3 million home glut from pre-financial crisis overbuilding and created a deficit of 4 million homes, wrote B of A researchers. So let's go back to the starts and look at this, because what he's saying is we had like a steady run, right? But then a huge spike, and he's saying there was a glut of inventory. Bank of America is saying there was a glut of inventory during the GFC. And then so home builders just pulled the plug and said, you don't want any more supply? No problem. We'll pull the plug. And they did. And supply dropped off the face of the earth. But because we had stopped building for several years and then gradually increased, the demand outpaced the supply. And it still is. All right, let's go back to the article. So anyway, they have National Association of Realtors. The NAR chief economist Lawrence Young estimates the U.S. is currently underbuilt by 3 million to 4 million units. America is facing a housing shortage due to multiple years of underproduction in relation to U.S. population growth. That is why home prices hit a new record high in 2023, even as mortgage rates rose. We estimate around 3 to 4 million units shortage in the country, Young tells Resi Club. You know, I just thought this was just a really telling article and data set. What I thought was really interesting is that like Fannie Mae was the most bullish from a, hey, we need the most houses, 4.4 million. But like, you know, JP Morgan or even realtor.com is under them. I mean, realtor.com is at 2.3 million. National Association of Realtors is 3 to 4 million. That's their estimate. So they maybe a little more moderated, right? So then their article actually addresses why there's so much variance on the data. It says a lot of assumptions are made on the demand side of the deficit calculation. And a senior economist at Zillow tells Resi Club firms might make different assumptions about who is included in that demand headcount. Housing supply is very clear cut. You can observe it directly from the data. You can see how many units are being built. The demand side, however, is unobserved. You have to make a number of assumptions in order to come up with a reasonable estimate for how much demand there is for housing. Yeah, calculating how much demand there is for housing is a lot harder than calculating the supply. That's easy. Supply is easy to calculate, even though there is like hidden supply, people say. But I'd argue I'm pretty sure there's always been hidden supply, right? I mean, home builders, aren't required by law to list their houses on the market or in the MLS or anything like that. It's not, we don't have to do that if you're a home builder. But in fact, there's houses being built behind my house right now, and they're not on the MLS. So you don't have to do that as a home builder. So calculating supply can be a little tricky, but at least you can kind of put a number on it. But home demand, that's a lot trickier, because what he says here I thought was very telling. Zillow's latest analysis reported in 2023 has the U.S. housing market underbuilt by 4.3 million housing units. Using 2021 data from the American Community Survey, the real estate marketing platform Zillow estimated that there are about 8 million individuals or families living with non-relatives who potentially would prefer to live on their own. They assumed each one of these individuals or families would opt in to have a home of their own, whether that be a unit in a multifamily rental development or a single family home that they own. After subtracting the 3.7 million housing units available for rent or sale from the demand pool of roughly 8 million, Zillow came up with a deficit of 4.3 million units, an estimate that's relatively high compared to others. No surprise from Zillow. They're in the real estate business. If they had said we don't need any houses at all, we only need like 500,000 houses, that would be a shock. They normally seem like they err on the higher side of estimates when it comes to being, bullish about the housing market. No surprise. So I thought it was good that he averaged them out, with a bunch of other opinions, because the lowest opinion is only 1 million units. And by the way, if we're on track right now to build 1 million units in the year, if the absorption rate, the rate at which those houses are purchased, doesn't hold steady or increase, we will meet the supply that we need. In fact, if Zonda's right and we only need 1 million units. However, if Zillow's right, we need 4 million units, or if Fannie Mae's right, we need 4 million units. We got a lot of building to do. A 2023 report by John Burns Research and Consulting notes that the firm's more conservative estimate of 1.7 million homes stems from the understanding that there are market and social constraints on household formation. So they're kind of being more realistic at John Burns, saying, not everybody can afford a new home, and prices are high. They obviously, there could be a recession coming, and interest rates are higher. The move up buyer, the buyer that typically sells their $200,000 house or their smaller house and moves up into that new build house that may be, double the price, that guy is gone. That seller is, and that move up buyer is gone because interest rates have increased so fast. Most sellers are staying put, and owners are staying put and holding on to their relatively low interest rates. In the report, John Burns Research says housing affordability is a significant hurdle for some people to form a household. The consulting company also considered that many people are choosing to delay household formation for cultural or lifestyle reasons. Moody's Analytics takes a similar approach to its analysis. We're accounting for what we call pent-up household formation, explains Mark Zandi, Moody's Analytics chief economist, in an interview with Resi Club on Tuesday. Pent-up household formation is determined by how many households can't form because someone can't afford to rent or buy. So the individual stays with their parents. Zandi's estimate is more conservative at 1.7 million units of shortage. There's a lot of different ways of measuring it, Zandi says. What I think is most important is the vacancy rate. That's the bottom line. Article goes on to talk about the impending wave of multifamily supply, which is massive. So look down here, and this chart will show you how much supply has been built and hit the market for multifamily, not single family. This chart's for multifamily. So this part of the article basically goes on to talk about, hey, because there's a ton of multifamily and apartment buildings hitting the market, over the next 2 to 3 years, will that help ease the demand and ease these numbers of new construction houses that we need? They basically say it will help, but it's really not the solution we need because a lot of people still prefer to buy a single family house. Now, the next part is we're going to look at just how much demand there is for single family houses. And I'm not talking about these studies about how many units we need necessarily or how many units we're short. I'm talking about institutional investors that own over 1,000 units, because there is a huge company, Blackstone, that just purchased a company called Tricon. And with it, they purchased 38,000 single family houses. And that's the article I'm going to show you right now. So this article, linked in my description below, says Blackstone extends bet on single family rentals with US $3.5 billion Tricon deal. They paid cash, $3.5 billion in cash, to buy this company, and along with it, 38,000 rentals. And now Blackstone claims, they're privately held, they claim that they are the largest commercial property owner in the United States, or maybe it's the world. I'm not sure how they measure that, but they say they're large, and I believe them because they just bought 38,000 houses with $3.5 billion in cash. I'm not going to read this article. I encourage you to go in and read it. But part of the article, though, that I thought was the most interesting is this. In addition to the purchase, Blackstone plans to complete Tricon's existing $1 billion development pipeline for new single-family rental homes in the United States and a $2.5 billion pipeline of new apartments in Canada. Blackstone also said it intends to complete an additional $1 billion in planned capital projects to enhance the quality of existing single-family homes in the United States over the next few years. So the point of me reading that one paragraph out of this article is to demonstrate and get you to think that, hey, these companies like Blackstone, Tricon, other institutional investors, and by the way, small investors like me, mom and pop investors, they are ready to buy when the market is right or when the deal's right. It's not like they're sitting off on the sidelines letting you as the homeowner or me as the homeowner or my clients as the homeowner run out and beat them to the punch. Ain't happening, folks. These 38,000 units they bought, much to the chagrin of a lot of people, never hit the market. Nobody ever got to look at them. It's not like they went on the MLS and the market was flooded with inventory and prices crashed. No, these guys just acquired those houses from another investor. And that happens all the time. I don't have buckets of cash. I don't have piles of cash laying around, but I know a lot of investors here in the Columbus area who do. And The cash varies. Some have $1 million, some have 10 million, some have $100 million that they're ready to deploy when they find the right deal or portfolio. The point of all that rant and ramble is people like single family houses. It's not a new thing. It's not something that's going away. These companies, when you spend $3.5 billion in cash, you're not hurting for cash. So you're financially probably in good shape, I imagine. And do you think this company is going bankrupt and just going to give these houses away to the public? Absolutely not. They're going to hang on to them because they know you like single family houses. I like single family houses. And a lot of other people like single family houses too. So they want that as an asset. They know it's a great asset. And they know we're not making any more land. And as you can see, we're undersupplied with single family houses. So it's a good business to be in. So if you're looking for a single family house, you're going to have to compete with these guys. You can compete with them. And this video right here, you should probably watch because it shows you how to go out, drive the streets, and find a deal. And then this video right here shows you how to actually write a letter to the seller and the owners of those properties to find an off-market deal. These two videos show you the techniques I use to find properties. I find multifamily properties like this. I find single family properties like this. I found them for clients that wanted to buy houses. I've also found them for myself as investments. So there are ways to beat these guys out. So if you're a local buyer, you have a distinct advantage over these big guys. Even if you're looking out of state and you're relocating, there are ways to find off-market deals that aren't on the MLS at all. And sometimes you don't even have to use a bank to finance it. I use seller financing all the time. It's not illegal and it's not difficult to put together if you follow the right steps. Anyway, I'd encourage you to check out these videos because they can give you tips on how to find opportunities. That's what everybody wants, right? Just an opportunity to buy a single family house for your family. I get it. Use my techniques. See if you can land something. So in conclusion, I'd just like to know, what do you think of all this new construction hoopla? Do you think we're undersupplied? Are we undersupplied in your market? Do you feel like there's a glut of new construction where you live? Comment below. I'd love to know. Also, have you gone out and actually tried to compete with one of these big institutional investors and lost? I have several clients and I've written offers for clients where we lost to an institutional investor who paid all cash. Again, these guys have cash. They're not going anywhere, folks. Stop pretending that there's an end and doom coming to them. And that's when you have the opportunity. You got to create the opportunity for yourself. Don't let others create the opportunity for you. Don't wait on the Federal Reserve. Don't wait on institutional investors to go bankrupt. Don't wait on a recession. Don't wait on a foreclosure wave. If you want a property now, go out and get one. If you don't want a property now, don't worry about it. Not everybody wants a property. Renting's not a bad thing. Don't let anybody tell you it's a bad thing. And don't let anybody tell you now is the right time to buy. Only you can make that decision if it's the right time to buy or sell real estate. Only you can make that decision. All right. Anyway, thank you for joining me. Please like and subscribe to my channel. And I'll see you on the next video.